welcome to Bloomberg Quint. The markets are cheering the early trends on counting day. Nifty's crossed the 12,000 mark, while Sensex too has gone past the 40,000 level in today's session. What kind of bet should one take on a day like this? Let's ask our experts. Joining us today are Jitendra Panda, who's an independent investment advisor, and also Gaurav Bisa of LKP Securities. But before that, let's go across to Agam Vakil, who's standing by with a quick market check. Agam, psychological levels being crossed today, 12,000 on Nifty, 40,000 on Sensex.
Well, Navneet, certainly a milestone, a very large historical milestone. You know, this is going to be a very important day for the markets too. Let's start off by taking a look at how the benchmark indices have done and are doing right now. You already mentioned, well, the Nifty has hit and moved about the mark of 12,000. So that, of course, is a key level. We're looking at about a profit taking in the last 15, 20 odd minutes, as you can see in the last, part of the graph out there. But, well, there's plenty more in store. It's the same for the Sensex. In the Sensex, well, it did hit the mark of around 40,000, came off to a certain extent. Again, it's the same, about a profit taking coming through. But what are those stocks which have actually led these gains? So if you consider the Nifty, it is essentially, well, I would say, financials. But if you say for Adani Ports, which is up 10%, you have Yes Bank, State Bank of India, ICICI Bank, Indiabulls, Housing Finance, all of them from the financial sector moving from strength to strength. We also have the likes of Larsen and Toubro, of course, from the infrastructure also moving up. On the losing end, we'd hardly have any. Actually, we just have about 5 stocks, and none of them are losing over 1% at this point in time. To take a look at the broader markets too and how they've done, well, we do have the likes of Bank of Baroda, Adani Power, KNR Construction, Indian Bank, all advancing in trades, showing significant gains and on good momentum too. On the losing end, something like a ITD Cementation and a Heritage Foods, along with Symphony losing out. But again, the momentum is clearly with the gainers. How is the futures and options space stacking up right now? Let's talk about the futures first. More longs coming through, 5% increase in open interest for the Nifty futures, and the Nifty banking futures also seeing an increase of as much as a whopping 23%. This is, of course, considering we've already seen a significant accumulation over the previous few days. And perhaps the more important variable here is the India Volatility Index, which has come off by as much as 28%. And this is this means that a lot of traders now are ruling out any more uncertainty, of course, given the kind of trends that we're seeing as far as the Indian elections go. But moving on to your 23rd May, that is expiry today, your weekly options. Now, as you can see, we're looking at some amount of build-up when it comes to open interest. So while we did see Nifty move about the mark of 12,000 briefly, there still is going to be some amount of resistance around that level between 12,000, 12,100, 12,200 based on the accumulation in open interest. And as far as the 30th May OI go is, now, while until yesterday we did have the 12,000 mark as the one with max OI, but now that's been taken over by 12,500, which means that at this point traders are open to levels about 12,000 over the course of the next 1 week. Moving on to very quickly taking a look at some of those big movers in the open interest, that is futures. Adani Ports, Bank of Baroda, Ujjivan Financial, HPCL, all looking at a surge in open interest and all looking at advances. So a lot of longs building there. I'm sure there won't be too much in terms of unwinding, but if we can also have that list coming up in terms of stocks which are looking at a decline in OI, Raymond, Reliance Capital, and MDC. Well, on the whole, it certainly turned out to be a very strong day of trade, and we're going to have to wait and watch whether or not the benchmarks move back above those important psychological levels, Navneet.
Thanks for that, Agam. And let's not forget, today is Thursday, so the weekly options of Nifty and Bank Nifty, they expire. And elections definitely breed volatility in short term, but today you've seen the India VIX collapsing. The base for this market has moved higher. What sort of positioning now should be taken on benchmark indices? Let's go across to our guest and find out from them. Jitendra, hi, good morning to you. First, I'm going to come up to you at 12,000 levels. Would you take a trade on the upside as the base is now moved from 11,500 to there's a lot of put writing which has come in at the 11,800 put strike today?
A very good morning. market upside, although from my view, is limited because we have seen in the last two election results, Nifty has moved generally by 1,000 points. Okay, and we have already from the 11,100 levels, we are very close to that 1,000-point rally. So market as we at the pre-exit levels. From that, we have really moved 800, 900 points, and fundamentals are not in really good place. And as pointed out, the valuations are already stretched. We are moving at 22 times. So having said that, I believe upside is limited, and we should look at opportunities to book profits or to buy the put options.
Okay, Gaurav Bissa, what about you? Would you take any bet today, considering it is the weekly options expiry day? Second half could be a little bit volatile.
Good afternoon. If you look at the overall data, yes, we've seen some amount of portions getting built in Nifty index. But if you look at the option chain, you will see that 12,000 has commanding a decent amount of concentration, but we are not seeing aggressive writing happening in the put side. You talked about 11,800. If you go back few days, whenever there has been a strong uptrend in the market, the sellers used to write even at the money options. So we should have been seeing the writing happening in 12,000 put option, which is the case. So as long as we are not sustaining above level of 12,000, I would not be interested in buying for further up move today. There might be some more upside in coming days, but for now, I would say that if Nifty index holds on to 12,000 levels, probably a weekly 12,100 call option can be bought. If that does not happen, then we can see a small dip towards the level of 11,900, 11,880. This is where one can even move in future segment, because the kind of breakout that we have seen, we may try to retest the breakout and then go up again. So for me, the lucrative price point would be around 11,880, 11,900. But for time being, if it sustains about 12,000 mark on the spot side, then only I would be interested in taking a call option.
Okay, perhaps a trickier question for experts talking about stocks, considering we have seen such a surge in a whole host of these counters, but yet I would like our experts to come in and weigh in on that, of any possibilities when it comes to trades. Jitendra, coming to you, firstly, if you can give us some stock ideas, but even if you can't, in terms of sectors even, where would you place your bets now based on the trends that you're witnessing?
On the market side, if you see markets have moved up and companies where results have come, I would like to look at doing a covered call rather than doing something else on the market. So the covered call, I would recommend, see for example SBI, a good result, excellent result, and has moved up. And on SBI, why don't today also is upsurging? Why don't we do a covered call if you have, or sell the higher 395 call options? And in fact, you should look at selling the June options, where still there is some implied volatility, higher volatility still available. So look at those opportunities where we can sell a 395 call option of SBI, or maybe a Yes Bank, which has moved up in this kind of euphoria, where we know fundamentally there are certain still concerns available, so we can sell at higher level. Even Tata Motors, so the stock, or Bank of Baroda, these are the stocks where you should look at to use the up euphoria where the results have not been so good, to sell the call options at higher levels, which are more comfortable. And look at, if we are selling option, call option is very risky, or we are not, don't want to take risk, then you should buy the put options on these stocks.
Okay, the banking stocks have outperformed Nifty if you look at it in terms of May series. Bank Nifty is up almost 3% in trade while we speak, and the Nifty PSU banking index, that's the top sectoral gainer for the day, up almost 6.5%. Even the private banking space is up nearly 3%. Gaurav, in terms of stock futures, is there any trade that you would take in any of the stocks? If not, specifically how Jitendra was talking about the banking stocks, we've seen surge coming by for stocks like IndusInd Bank, which was underperforming so far in the May series.
One needs to be a little bit cautious in the banking names. The simple reason that we have seen about 1,500 point odd move going in last week or so. So there's going to be a lot of pressure in terms of profit booking. We are seeing Nifty and Bank buzzing today, but after we see the event getting over, we may see some amount of profit booking into the picture. And in that case, there's a possibility that people might get a little bit stuck. So my recommendation would be to buy stocks which have not moved too much among the banking, especially PSU banks that you talked about. The Union Bank is one that is looking interesting. We have seen that it's been sustained levels of 70, 70.50. About to give a breakout, and it's not more up in tandem with what the other banking names, PSU banking names have seen. So when one can use a stop of 70, buy for target price of 80. BPCL is one that is looking interesting. It gave a breakout. It's moved up a bit, but if you get around levels of 402, 403 with a stop loss of 395, one can buy. It has been a breakout. Can go towards 415, 420. Conversely, one can also buy HPCL. Both have given a similar kind of pattern breakout. So even that can be interesting as well.
Okay. All right. Okay. So there's a very interesting query coming in on our YouTube feeds. We have Tamil Selvam who says that he's bought the 11,500 30th May expiry call and bought the 12,000 put. But this is also okay. This is also the 30th May expiry, and he wants to know, will this position provide a profit? I am uncertain as to how this works, but okay, for clarity again, he's bought the 11,500 call and also bought the 12,000 put of 30th May. And he wants to know what can be done with this. Gaurav, coming back to you, how would you help the viewer? I am not certain as to what the objective of the viewer is, but if you can actually elucidate this.
In my opinion, the objective behind initiating this strategy is that in last couple of days we have seen the IVs trading at exponentially high levels, and the premiums were exceptionally high. So people might think that 11,500 call option with an intrinsic value of say 250 rupees is quoting at 400 rupees. So 250 is the intrinsic value, 150 is around the time value. So once the event gets over, the IVs fall down, we may see profit coming in, and that is the last time one would be buying a in the money call and as well as in the money put. But generally, this particular strategy, it has a flaw. At any given point in time, if your proportionate fall does not happen in IVs, you will tend to lose, because even at 11,800, maybe your 11,500 call option would be at 350, 360 rupees, but your put option will also be quoting something because it will act like a future. So the delta hedging does not happen in a very proper way. One can hold on to the strategy, but I don't think a very good money would be made. When the IVs are high, always play with ratio spreads, like buying 11,800 call option and selling 12,100 call option. That would make more sense. It will give you small amount of risk, and the wide area is also captured in the strategy. But in this particular strategy, I don't think too much of money will be made. You wait till 1:32 p.m. and if it does not make a good amount of money, then finally exit.
Remember, going into this important event, IVs for all these option premiums were on the higher side. Today, now that we're done with the event, by tomorrow, by the second half, as Gaurav was mentioning, you could see the IVs falling off. Well, the other pocket since the time exit poll had come about, which was doing pretty well, was the Adani Group stock. So today, also among the top stock future gainers, you've got stocks like Adani Enterprises. Adani Ports too has seen gains of nearly 7.5%. Adani Power is up nearly 6 to 6.5%. Jitendra, if I could come to you, would you take a bet on this group? Couple of stocks are high beta stocks, and considering the sentiment that we've got today, a high beta stock from a couple of them from the NBFC pack or from the realty pack tend to move higher, but these rallies usually fizzle out in a day or two. Would you venture out into any of them?
No, as you rightly said, and has been observed every time whenever there are big events and all that, they fizzle out. So as you rightly pointed out, they will fizzle out certainly. So in case any of our viewers has position, they should during the day book profit and should not wait more, because post exit poll, all these stocks have really done well. And today also they are doing very well. So at both the things, then we see a huge run up already happened. So they should book profit, and no fresh long position should be taken by any other viewers. That's what my recommendation.
Gaurav, a final question from my side. Among the stocks which are lagging at this point, something like an ITC, or, well, there are a bunch of other names which are not exactly doing well. Would it be safe to assume that you could go short on some of these names, considering if there were to be some profit booking coming through, well, these names would suffer a little more than the rest of the markets?
No, actually, I don't think so. ITC has been one of the names, major names that has not been performing quite well, but it break up a level of 290, 292. It has a resistance of 305, so basically it's trading in a range. If you want to play for 5-7 rupees, yes, it can be shorted and it can see some amount of downside. Apart from that, IT space is one that has been struggling, so one can find shorting opportunities over there. It's trading near the support area. Let us talk about Infi. 700 put option commands highest concentration. 100 DM is also placed on those. 200 DM is also placed on those levels. So if it is below 700, then there's a possibility we may see a 20-25 rupee dip. Similar is the case with TCS. Like you've seen a good amount of profit coming from high level trading near the crucial area. If it does not sustain, we can see some more downside in TCS. So if somebody wants to play for shorting opportunities, don't look at ITC, but probably IT is the one can look at if we don't see a jump coming in these names. Probably these will be seeing a decent shorting in next few days.
Jitendra, would you take a position in stocks like Shree Cement or India Cement? Shree Cement particularly has been doing well in the past few sessions, but I think India Cement in this pack has been an underperformer, which has just started moving higher this week. So which is a better bet if one were to take a position in the cement space?
Cement space is looking good. Fundamentally, I mean, with the new government coming in, there should be a lot of focus on infrastructure and development and growth, of course. So we believe that there will be positive on the cement sector. But at this price, whether we should get in or not will be certainly deeper. But of the two stocks, India Cement will certainly see much, because it's a high beta stock, it will see much better up move. Rather than going into a very high value Shree Cement where the retail participation may not be there. So we believe that among the two, India Cement should do well. And as a sector, I mean, we can see next few months there could be positive outperforming on the cement sector.
Okay, and we've seen actually the rollovers for cement were looking good. Let's see how it pans out for the next series. But before we wrap this conversation, Gaurav, if somebody had carried forward their long positions yesterday, we've already touched the mark of 12,000. It is the weekly options expiry. You could see some bit of volatility in the second half. What would you advise the traders who are still sitting on their long position? Should they be booking profits or should they hold on?
So people who have bought at the lower levels, and considering they would have bought at quite a few interesting levels because we open on a gap up note. I would recommend book partial profits over here definitely. Keep a trailing stop loss 11,880 and it should be 11,080 on the spot side should be a trailing stop loss. Really current level sustain. We may again see Nifty crossing about 12,000 in second half. If that happens, then they can play for the targets. But at this point, use only trailing stop loss. Do not buy fresh. There is going to be incremental border volatility, and the stop loss suggestions for the intraday basis are just 100 points up and down. So I don't see a trade here.
Okay, guys, on that note, I'm going to take a moment to thank both our experts, Jitendra and Gaurav, for joining us and taking us through their views on, well, a very special day in the markets. Well, for more updates on the F&O space, you can keep an eye on our website, bloombergquint.com, specifically the futures and options pages. And on that note, it's a wrap on this edition of the F&O show. We return with more after a short break.